Welcome to an overview of the JS Services desktop application. The desktop is a unique trading tool that supports most trading styles and methods. The analytics are not a subjective opinion or indicator that needs to be interpreted, but rather a presentation of objective technical facts that you need to be aware of to align your trading tactics. JS Services has been supporting discretionary, fundamental, event, and behavioral traders for over 30 years, providing them with the facts they need for improved intuitive decision making. When you start to work with the application, don't view it as some new method you need to learn, but rather something you need to be aware of. The technical facts supporting the current market state condition, so you can align your trading tactics. JS Services is presenting the technical truths that all methods have to deal with. The awareness to these facts provides clarity, which is the edge for intuitive decision making. If trading is a chess game, your trading tactics are the pieces you play the game with, and the market state condition is the board. Understanding the nuances of each condition is critical to improving your awareness and ability to make intuitive decisions. The market state is broken up into three parts: the state itself, the structure of the state, and the inherent strategy themes that support the state and structure. The desktop application is broken up into three sections as well. I'm going to use the help tree that's embedded in the application, which provides further detail on all aspects of the desktop application. The market color section is JS Services indicator that defines the market state. The price map, its structure, and the playbook, the inherent strategy themes. Good awareness comes with building a knowledge base. To do this, we start with the market state condition. Like painting a picture, market state is the base coat. The market color grid contains all the symbols that we cover. If you click on a market, the market description, and if it's a futures market, the contract month symbol will come up. So you can go through different markets and identify the different market states that they're in. The default setting is what we call our MSB, or market structure bias. Which presents a color-coded definition of each different market state. JS Services has identified 26 unique market state conditions. And the grid displays each one of them with its symbol, its general market state type, what we call our signature tag, what is the signature market state, one of the 26, and where is the structure bias. The idea behind the grid is that it's a strategy-based trading tool, so you're able to align your trading tactics with market states that complement your tactics. So we can simplify this and look at just the general state types, and it'll just show us here's markets that are in neutral, here's markets that are positive trending, negative trending. We can dial into more of a even trending ability. So this is our ADX indicator. It tells us if we have markets that have the ability to trend or no trending ability. We can also dial into specific technical indicators. And so this is our dynamic channel, similar to our Bollinger Band, and the yellow signifies markets that are at an extreme. If you have an extreme deviation strategy you like to trade, these will be good markets to investigate, to execute that strategy. Next section is the price map structure. The price map is not a series of subjective support and resistance levels. The price map represents the structure of the market state. It's more of a behavioral study. The price map levels may coincide with classic support and resistance, but their real value is the fact that they define the price framework of the market state. So what do I mean by that? I mean that if we have a market state that is a bull trend is defined as a market that's making higher move highs, higher move lows. That's a definition of a bull trend. That's a fact. As long as the market continues to make higher move highs, higher move lows, it's in a positive bull trend. We should expect it to perform as a bull trend. Not necessarily going linear. You're going to have corrective pullbacks, but it's going to build positive structure. The price map defines this structure, and it does this with 3 price points. Well, one is what we call our R level. It's the sentiment bias for the day. This will skew the market state. So if you have a market that's at a bull trend and sentiment's below the market, if that's in line with the state, you have positive sentiment in a positive trending market. But if you have sentiment above the market in a bull trend, it's actually indicating a potential for a corrective move in a bull trend. Market's still in the bull trend, but sentiment above the market has it negative. Once the market gets above this sentiment bias, then the bull trend can really engage. And so the sentiment bias will skew the state condition. You can change it. You have a different expectation. Again, it's all about awareness. And the other 2 price points are what we call our upside pivot and our downside pivot, which form our critical range. So this is a resistance pivot and a support pivot. And so each of these 3 price points define the price structure of the state. So you know when you're at this price point that you're at the potential peak of a bull run, and we might have a corrective dip. You'll have this awareness, or the awareness that if you're trading at this support area, if you're able to establish a long position here, you may have just bought the low point of the next reaction higher. This is the difference between support and resistance in the price map. Price map levels identify the structure of the market state. With a support or resistance level, you're not sure what to do when you get to that price point. With the price map, it's very clear. If you want to fade a move in front of that figure or buy a breakout through it. Another key feature of the price map is it identifies the segment distance the market's trading in. So this is the critical range, and we can subdivide the critical range into different segments. And the price map identifies these segment moves the market likes to trade in. So this is really the bigger macro structure picture with the critical range. And it's at these levels where you have more fund participation. And it's in the middle zone is where you really get a lot of algo participation. There's more edge at the market structure points. These are points of dynamic equilibrium where you have the buyers and sellers are meeting here. Is the market going to fade and rotate from an expansion to a contraction, or is it going to continue to expand? The market makes those decisions at these price framework points. And so you have a lot of funds that are coming in and looking for those potential shifts in state during the session. Versus trading in the middle is really where the algos live. Remember, the price map represents the price framework of the market state. So it's making decision, is the market going to hold structure and perform to the expectation of this state, or is it going to break structure and transition? Is the bear trend going to remain true? If it is, it's going to remain below this price point. It's going to remain below 152.04 in the British pound. And if it breaks that structure, it's not true anymore. It's no longer a bear trend. So this is a big macro structure point. This is a point of dynamic equilibrium where the market is either going to make a decision to resume that trend or break structure and transition into a new market state. This brings us to the playbook section of the desktop application. And the playbook really consists of all 3 components: state, structure, and strategy. And this is where we get more granular, more detail, really understanding what that condition is. Again, we're painting a picture. What's the base code? That's the market state. What's it mean to be in that state? What are the expectations? What are the tells that the market is breaking structure and it will not perform to that expectation? Really owning and understanding that market state. And then structurally, what are the market color conditions that make up that state? Why is it a bear trend situation? What's happening over the past 10 days with that market state? How has it shifted? What's the structure of that state? And where's the sentiment bias? And what does that mean? In the strategy section, we get a full definition of here's how the structure bias is going to skew the state. And then because we're in this state, because we're in this structure, what is the optimal thing to do? In a bear trend, sentiment above the market, we want to fade momentum into the R level. And if we get a squeeze to the upside, and we get a reversal exhaustive signal, we're going to accept that as well, because that's in the expectation of this negative trend, bear trend, sentiment above the market, lower move lows, lower move highs. That's the expectation. What's the best thing to do? Sell the market at one of the peaks. That lower move high peak area. That's the optimal thing, because if we are participating here, what's the trade vision? A new leg lower, or at least a test of the lower end of the critical range at the downside pivot. And what's the hedge strategy? So if the market is breaking structure and we're no longer in that bear trend, what are some hedge strategies? Well, if we get a breakout to the downside, but it's a false breakout, and we get a reversal signal, a buy DP reversal, and with the expectation, hey, we're going to get a rally back up to the sentiment bias, back up to the R level. And if we break structure, we get a breakout, a buy R breakout, and the market signals that the bear trend is no longer true, and now we're transitioning to a new market state. We're not sure what that state is, but we know that the bear trend is no longer true and we're in transition. So that's knowledge, that's fact, that's awareness. We have to change our tactics. Many traders get caught up in the drama of the tick-by-tick moment, stuck in the middle of the trees, not sure which way to go, and forget or don't know the big picture. They lack vision from above the forest where the direction is clear. The macro structure of the market state condition. A fact focus on price action within price structure, viewed through the context of market state, provides clarity to the market's true intentions and improves intuitive decision making. So let's take a look at a practical application of using the JSDesktop and show how a fact focus on the market state, structure, and strategy themes provide clarity to opportunity. So if we take a look at crude oil, we see the market state is neutral digestion. Neutral digestion attributes are digestive, sideways, no bias. Those are the attributes of a digesting market. One thing about a digesting market is it can be the precursor to a breakout. So markets in a digestion, they wind up, and then when they're done winding up, when they transition to a new market state, they break out. So that's part of the conditions of a neutral digestion market state, is that they are either going to consolidate or they're going to break out. The structure of the digestive state today, we have sentiment bias at the downside pivot. So the market has a positive sentiment bias. So it gives this neutral digestion a positive skew. So the optimal strategies for today are to fade momentum, to buy a break off the lower extreme of this digestive action. We don't want to fade momentum to the upside because we have this positive bias. We have underlying positive tone, and the market might search for resistance and expand its digestive range. So we will execute a sell UP reversal strategy as another optimal strategy, where we get an exhaustive signal where the market takes out our resistance and then falls back down through it. And if the market decides to transition, it's going to hold structure, build positive trending structure and break out above the upside pivot and not look back, or it's going to fail below our sentiment bias and break out to the downside, and again we'd expect it to build a trend. JS Services recommends that you plot the price map levels on a chart so you can view the price action within the price structure. We also offer a couple third-party applications that'll do that automatically for you. And you can go to the website and click on our vendor integrations, and you can see the different vendors that we integrate with. It's important to view the price action within the price structure. So here you can see 4610 is what we call our directional. That's the midpoint of the critical range, kind of a rotational number. Below this price point, the market's going to be leaning to test the downside pivot, and above it, it's going to be leaning to test the upside pivot. So we can see overnight that the market in crude oil has been trading in the middle of the critical range. So we're basically dead center of the neutral zone. So there's really nothing to do, and now all of a sudden the market starts to break, and we're getting hopeful that we're going to have a buy DP fade strategy play out, and we're going to get to enter the market at the DP. Market continues and it starts to build structure above the directional. An important thing to be aware of is the variance around an inflection point, and if we look at any level, there's always a sweet spot around that inflection point. We call it our entry-exit adjustment differential, and you have a variance and what we call an alert distance. And basically, if you're trying to enter the market too close to an inflection point or a price map level, you're going to miss a lot of the good trades, but you're going to participate in all the losers. You need to understand that there's a zone around that inflection point, kind of an area of influence, and we'll just call that the alert distance. So with this application, we can actually put the alert distance around the inflection point on the chart. So here we're still having this coiling, and the market is not providing us much clarity. There's not much opportunity. The market is continuing to rotate around the directional, and then here we have some clarity. The market broke structure. It was below the directional. Now it moved through the alert distance to the upside, and it broke structure positively. So the market is giving us a tell here that it's leaning to the upside, and we might get a play for the upside pivot. So we're starting to, we're always looking, what theme are we in? Are we in the optimal strategy theme or the hedge theme? And at the moment, we made a play for this level. We didn't get there, and now we're breaking structure. Are we going to rotate higher and test this area? We do have understanding that this is the positive bias momentum. Again, we're always looking for tells, and the market is starting to build positive structure, and we have a test of the upside pivot. Now we're not fading this move, so are we going to really shift into a breakout? Well, we did have the coil, we did have that digestion, and the market is starting to build structure. This is a tell of positive momentum, higher move highs, higher move lows, simple trend line or moving average, and here we have a breakout of the upside pivot. So now we have further clarity that now this optimal strategy is no longer happening. We're not in a neutral digestion. We're not going to digest. The market's transitioning. It broke out. We're in a hedge strategy theme. We're in this positive theme, and we're having a breakout, and we're right here. And it's the beginning of the breakout of the critical range. See how the market is trading in segments. So here you have one full APMD segment, and here you have a breakout signal and another full APMD segment. This is key for trade vision. So when you're entering the market on a breakout, where can it go? Half APMD, full APMD, and 2 APMDs. And the market continued to hold structure. Again, when you get a breakout, you're anticipating this market to do this. You're always anticipating a textbook situation, because if it breaks structure, that's also a tell. You shouldn't hope that it's going to follow through if the market's telling you it's breaking structure and it's not going to. If the market's going to run, it's just going to run. And so that's your story, and you're sticking to it. What's the theme? We're in a hedge strategy theme. The expectation is a buy UP breakout. When the market breaks out, it should hold positive structure, and it's holding structure. We can use the price map levels as a ladder, and you can see here the market is continuing to work positive structure. We can use these variances around the inflection points, around the price map levels, to give us some guidance. And these are somewhat dynamic. It's always good to look inside the order book to see what's happening at the moment. But as long as the market is holding positive structure and climbing the ladder, and you take out a price map level, we expect a move to the next level, pull back to this level, and we expect it to stabilize. And as long as it continues to kind of climb the ladder, we should anticipate the trend to continue. And so here we have the market for the session where we're in a neutral digestion. We performed the expectation. We broke structure above the directional, which gives us a buy signal. we started to trend higher, and it gave us another buy signal on a breakout of the upside pivot, and we keep our trade vision, 1 APMD and 2 APMDs. We felt, falling at the moment just shy of 2 APMDs in the crude oil. These strategies will continue into after hours trading, and we can see that this market ultimately followed through, attaining our second target. For more practical application examples, you can visit our blog, which goes through different practical applications. You can really start at the beginning and go through it to get more insight on how to use the JS Services desktop application. Feel free to email us at info@jsservices.com. Thank you and good trading.